Hey guys, it's a market update. We have to prepare for the worst in crypto over the next 6 to 12 months. Not just specifically because of crypto and what's happening, but also because of what's happening in the macro. The Fed yesterday paused interest rate hikes, but they actually came out with a more hawkish forward view of interest rates. Now, this is obviously complete nonsense. They have to try and co-opt the narrative around what's happening, and they are fairly successful in doing that. And that means that, potentially the market has to try and price that in because the market has to take the Fed at its word, even though this is just, a narrative that they're trying to spin that rates are going higher, even though they just paused rate hikes. But still, the Fed do control the short end, and that means they do control risk asset prices over the short term, which seems to be happening here. So we're going to go through all of that in this video. Both Bitcoin and Ethereum weakening in price action. This may be just a sell the news event, right? So we've had this huge rise up this year, and maybe it was, trying to price in the turn from the Fed. Well, for the first time, the Fed has paused. So maybe that's a sell the news event. You get this anticipation into that event. The Fed then do it, and then you get this sell the news, right, as people just kind of come out of those trades. Also, a potential breakdown here of this support is not great. Now, this may be because of macro, but may also because of just, the fact is the SEC and that part of the government that wants to neuter crypto, they have won, right? They won the battle. I don't think they're going to win the war, but they have won this battle. They have successfully stopped all of the crypto banks. They've successfully at least slowed, fiat currency flows into crypto. They have won the battle. They have taken some of the flows and speculation out of crypto, and we just have to accept that. They won't win the war, in my opinion, but the battle, they are winning that, right? So they have done these things, and we can't deny that. All that being said, we're still up from 15,000 to 25,000 this year, and within the normal cycle ranges. And so, it depends who you are, a short-term trader or a long-term trader. If you're a short-term trader, deposit bonus on Bybit, you get up to 30K on Bybit, and BitGet as well, links in description, fiat currency on ramps for these, and also those deposit bonuses, so check those links below. I want to get back to price action of both Bitcoin and ETH, but what the Fed did yesterday has to be explained. So the first thing is, this is the speech. So they held interest rates, but then they're also saying that the terminal rate projection is higher. So what they're saying is, we've raised interest rates higher and faster than ever before. We've completely destroyed everything, which you can see via the fact that inflation is coming way down and employment is still very low, but it's starting to tick up. They also destroyed regional banks. That is massively deflationary, and that is what the Fed are worried about under the surface, but they can't say that now. We're in the middle of this crisis. It isn't over, it's just a hiatus, because that got sorted out. Something else is going to break, maybe commercial real estate. Even Jerome Powell said that's a worry. Why would you pause then? Because you're obviously worried about that, but then also say, oh, by the way, we actually think terminal rate, so the end rate, is going to be much higher than we anticipated. Those two things don't add up, and the reason they don't add up is because they're not true, right? What the Fed's job is, two jobs, is to change interest rates, and also, so that's price stability. They want 2% inflation and they want full employment. So those things are the things they have to balance. The other tool that they use, apart from quantitative easing or tightening and interest rates, is narrative. Feeding out these stories in the press to try and co-opt the market into pricing risk in a certain way in the very short term. And they're actually very effective at doing that. So what this is, if you read this and think this doesn't make any sense, it's not supposed to make sense. What they're trying to do is co-opt at the narrative that they're really serious about inflation. But the fact is, under the surface, they're now really worried about deflation through this banking crisis. So why this doesn't make sense? Because it just simply isn't true. Why would you destroy regional banks in the States, causing a deflationary shock, because that will come, and then also say, oh, by the way, rates have to be much higher than we thought? It's obviously not the case. It can't happen. Plus, you've paused rates. So I think what they're doing now is pausing rates to see things really may get worse. Maybe they don't. But we'll just tell them that the terminal rate is higher to keep this kind of hawkish stance on the market, even though they physically can't do that now because money is fleeing the banks. So they're physically in a corner because all the money is flowing out of banks going into money market funds because rates are so high. So they're physically in a corner, so they can't physically raise rates, but they have to co-opt the narrative to try and actually remain hawkish. It's a very weird scenario, but they can control the narrative short term, and that's what they're trying to do. Time horizon is the most important thing now, short term versus long term, who you are as an investor, but also if you are invested in Bitcoin, crypto, or the markets in general, having your fiat currency liabilities paid for, or at least be able to be met over the next 6 to 12 months, because what's going to happen is the Fed are going to stay hawkish until unemployment ticks up, right? And so that is the end of things at that point, and that's the new cycle coming out of that. But we are going into it now, which obviously isn't great news. So what I can show you here is that this speech that he made has a very high rate of the word unemployment or employment. And I think he's just putting that word in here to make it known that this is something that he's starting to worry about. You can see here that the committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede attainment of the committee's goals. Well, he's starting to think about potentially unemployment starting to tick up. They have two goals, which is price stability, 2% inflation, full employment. Well, one of them is being worked on. So if we look at this is core inflation rate, which is coming down, starting a downtrend here. It's still way too high. And so they're not going to cut or do anything over the short term until that is way, way lower and shows to be coming down. However, it is in a downtrend. You can see, I think this is CPI or kind of general consumer price inflation as well. This is a absolute downtrend, and this doesn't stop because this is lagging, right? So it's a lagging indicator, and they started raising rates 12 months ago more. So this is, more or less going to be coming down. That is the trend of inflation, is to be coming down. Previous was 4.9, the actual is 4. This is a huge drop from 5 to 4, right? It's 1% drop in a month in inflation. So this is coming down fast. The inflation is usually a very slow kind of thing to move, and this is coming down by 1% in a month. So this potentially is something that can get out of hand on the downside as well once all of this data comes out. That is what he is starting to worry about, which hence the pause. But of course, as the data is still nominally too high, they obviously can't tell the market, hey, have at it, we're going to change. They are going to lie to us and say, we're going to keep on our track until the very last thing where they just can't do it anymore. And then they'll cut and go through the next part of the cycle. But until then, things are just going to get worse in the economy. You can see Eurozone recession, China very weak. Growth is weak in the States as well. Even though the stock market is up, most stocks are actually not up, and the economy, just has very low GDP. There is nothing on the horizon that is really bullish for crypto right now because the US has essentially curtailed it. And so investment flows, fresh money into the system just isn't there. And so what you're going to be getting is sell the news events, in my opinion. However, it's not like terrible news. And I'll show you this. This is leading economic indicators. This is recessionary territory. Every time it comes down here is a recession. Once, twice, 3, 4, 5, 6, 7, 8. And this is the 9th time. Each and every time previously indicates recession. So negative GDP or very, very slow GDP, and also a rise in unemployment. Well, we're just waiting for it, right? The Fed will not cut or do anything different until the unemployment ticks up, because that's their two mandates. But that is what they're starting to worry about, even though they're trying to co-opt the narrative about how they're being hawkish, because they need to be seen to do things, because it's, they need their credibility on controlling the markets. This is not good though, right? This is not good when you have people becoming unemployed, less investment money going around, and capital flows being curtailed into crypto. This is also the fastest rate hiking cycle in history, which means that something else, it could break. So what this is a difference between the destination, which everyone knows, which is much lower rates because of very low GDP, and potentially stimulus down the line as well because of GDP and unemployment being so high. That's coming. But what we don't know is when. And so something has to break, some piece of data has to come out. It will come out, probably not now, because between the pause and the first cut is usually 6 months. So you're looking towards the end of this year potentially. So there could be more pain coming when you have high rates and liquidity, not really flowing through. Everyone's saying inflation is bad, and then only in 6 months' time, maybe do they let up and markets can be let go. But until then, you're just going to see the battle and the to and fro between people that think that's coming soon and other people which actually have liabilities. For example, they're getting let go from their job and they have to sell their assets. What is the first asset to go? Probably crypto, because it's the easiest to trade out of, and you take your money out and there's no new flows into crypto because of what the government is saying. Not terrible news though, because we are still right where most cycles are. This is the Bitcoin cycle. You can see we came from the bottom during this period, which is the recovery period after the bear market. We literally went in a straight line to the very top of this range, and now we're coming back down into mid-range. So even despite all of the uncertainty and what's happening to crypto, I would say that this is, a fair value price for BTC, 25, 24,000, 23,000, totally normal where we are in the cycle right now. We could even go back down to the trend, the regression line of just normal growth of BTC, which would take us down to around 20,000 again. All of that is in play. All of that should be in your thesis when you're investing to say, if you're buying at 25, be prepared to go down to 20 as well. And it could go up to 30, dependent on some bit of news. But we have literally touched the low and the high for this part of the cycle, which is the 12 or so month period after the bear and before the halving. So yeah, there's a lot of bad stuff in the economy right now, but guess what? That just is constant throughout, all economic cycles. But Bitcoin right here is within its trend. It's not somewhere below. It hasn't collapsed. It's not crazy high where you should think this is not where it's supposed to be. It's right within, the normal bounds of its cycle. What the Fed say and tell you right now is forever and always not correct, not true, and completely false. Their job is not to accurately predict what is going to happen in the future. Their job is to react to the data as it comes out now and then manipulate the narrative about what you think they might do in the future. So this is a key differential between what a lot of people think, which is the Fed is out here trying to predict what will happen, and so I'm going to trade off of that. That actually isn't true. What they actually do is just react and then bring out false statements all the time, trying to manipulate what you trade right now. So the end game here is that the economy is slowing down significantly, and the Fed, under the surface, they won't say this, but they actually think a massive recession is coming with high unemployment, which ultimately, eventually, means much lower interest rates and even monetary and fiscal stimulus from governments. Yet again, they're not going to tell you that though. So as you can see here, they are forecasting a 0.4 percentage point rise in unemployment rate next year from 4.1 to 4.5. The Fed implicitly suggests a significantly higher risk of a recession. Even the Fed are saying this in their data, right? So they're saying, no, we're going to raise interest rates higher than we ever thought before with the dot plots. Oh, and by the way, there's going to be a massive recession next year as well. Those two things do not add up, right? So what we're seeing in the data is that potentially the economy is slowing very, very fast. Inflation coming down also means, the economy is slowing because all of the profits that companies make are getting crushed. So we are in a very weird stage right now, almost waiting for disaster. Also, the Fed as well. You can see that this is the unemployment rate, still very low, right? Historically low, but it always is lowest before a recession. You can just see the unemployment rate potentially starting to tick up right here. Not really a trend right now, but obviously what happens is you get that one print, that one day where the unemployment rate is like bang, up by 0.5% or something, and then everything gets repriced. For right now, that's not happening. So you're still in this, this mid zone of, trying to figure out when that's going to happen. You can also see here, they do expect there will be losses in commercial real estate. Who is going to pay for that? The banks are on the line for all the loans they gave to commercial real estate. Commercial real estate companies can't pay back those loans. They default on the loans. The banks are on the hook for those loans. The banks don't have any money because all of the money is now out in money market funds. All of the cash and dollars have come out of those banks, and investors are putting it in money market funds because rates are 5%. Who is going to pay for that? Well, the economy can crash, so that's going to happen. High unemployment. Guess what happens then? Fiscal and monetary stimulus. The destination is clear. It's just a time frame here. So make sure you are ahead of the market. Make sure that you can meet your fiat currency liabilities, and make sure you're investing in assets, if you have spare cash, that will go up in value as fiat currency gets debased, to pay for all of these losses and the stimulus that occurs, trying to get GDP back up to the rate that they want, which is 2%, because what we're doing now is crashing down into it. And there's no suggestion that that is going to stop, because China, Europe, very, very slow growth. Why wouldn't the US have this as well? So for crypto right now, it may just be time-based capitulation here, waiting for things to happen, right? Waiting for maybe the Fed to change what their narrative is, but the data has to change. Also, let's be fair, the US government has basically said, we don't want crypto, the current US government. Maybe that has to change, legislation comes through, something else, some sort of narrative has to change. To be fair, the government cracked down on two of the largest exchanges in the world, and what we've done is just sold off a little bit from range highs. So it's like not a disaster, but you need a new, very, very positive narrative to push us up through those range highs, and I don't see one on the horizon unless something really bad happens in macro, and then you're getting huge reaction from the Fed and the governments as well. But again, that all takes time, and unfortunately, before that reaction, you also get the sell-off with the risk as well. So that is investing. Dollar cost averaging through this time as we move into the next part of the cycle is important, in my opinion, though. If you are a trader, though, get the deposit bonus to Bybit and BitGet down in the description. MoneyZG Crypto Investor course. Check that out via the link below as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.